Good morning, everybody. Thank you for joining us. I'm Joanne Koontz of Koontz and Associates and Ray and Associates CPAs. Today, we wanted to bring you some more interesting topics. And as we turn the corner into August, the hurricanes are popping up and so are the trim notices. So I asked my friends at Maguire Sponsel to join me. They help us with our value adjustment board disputes and issues looking at property taxes. So today I've got with me Garrett Duffy and Matthew Barnhill. Thank you so much for joining us.
Thank you for having us.
Thank you.
I wanted to give you guys a chance to say a little bit about yourselves, and then we'll go into the information that we have today. Just as an FYI for the audience, if you do have questions, you can ask those questions at the bottom in the chat bar. We'll answer as many of those as we're able to. And if we're not able to, I'll certainly farm them out to the appropriate person, either on my team or on the Maguire Sponsel team, and try to get an answer to you. We'll also provide contact details, so if you need to reach them for more individualized answers, you're able to do that. So without further ado, thank you guys for joining me again, and give us a little bit of backstory about yourselves and your firm, please.
Perfect. Joanne, thank you again for having us. And just to give a little background on myself and Matt. So I am a relationship manager with Maguire Sponsel. I grew up in one of our other specialty tax niches with R&D tax credits. And now I help facilitate some of our engagements through Ray and other CPA partners around the country. And I'll let Matt introduce himself.
Yeah, my name is Matthew Barnhill. I'm the manager of the Property Tax Services Department here at Maguire Sponsel, and we're looking to see where we can add value to different property taxpayers. And right now, the focus is in Florida, so we're looking forward to diving a little bit deeper into that today.
Yeah, it's that time of year. Certainly, we start to get the calls even before the notices hit the boxes. So in our neck of the woods in both Sarasota and Manatee County, although this could be anywhere in Florida, the time frames are different, but generally speaking, throughout Florida, people can expect to receive their trim notices in the next week or so. So can you tell us a little bit about what that process looks like, what a trim notice is, things like that?
Yeah, absolutely. So the trim notice is going to be the notice of value. This is going to be the first indication of what your property's value is going to be for the next tax year. We're going to dive a little bit deeper into that. I know that Garrett's going to touch on a little bit of what we do as a broad overview first, and then we can dive deeper into the Florida specifics here.
Okay, thank you.
So Maguire Sponsel was founded back in 2007 by our two founding partners, TJ Sponsel and Dave Maguire. We started off as primarily a real estate tax focused and an R&D tax credit, specialty tax firm. But from there, we've grown to almost 100 employees across 5 offices, including Indianapolis, where I'm personally located, Matt down in Dallas, Phoenix, Detroit, and Atlanta. So we partner with CPA firms and real estate brokers all around the country to help in certain specialty tax areas. Our business model is a little different than most. We don't go direct to market, but we work through our network of CPA partners and assisted areas that they need. As you can see below, there's quite a bunch of areas that we cover. Focus today being property taxes, but we also have a cost segregation and energy studies department, which think of 179D 45L, which is phasing out over the next year. Where I grew up, our R&D tax credit department, so think of like manufacturing and maybe defense contractors down in the Florida area. They're developing new products and processes. Transfer pricing is more international focused. We have a full international tax compliance department. And then site selection, which I personally think is pretty exciting. If you have a growing or expanding business, we can help you identify where that new location could be. And a lot of these other service lines plug into that as we get further down the process. And this slide kind of goes into more detail on more specifically what those specific service offerings. But today's focus is property tax. So I'm going to hand it off to Matt, and he's going to walk you through what it looks like in Florida.
Yeah, definitely. So let's get into why we're meeting here today. So Florida is right in the middle of their property tax season right now. The slide says it's approaching, but We are officially here. We have started to see some counties release their values for 2025, and the appeal process is now within the certain window. Other counties are lagging a little bit further behind, so we have a little bit more time, but generally every county in Florida is coming up to their property tax appeal window. We are here to let you know about the great opportunity to reduce your tax liability through assessment appeals. So what we do as a department, we come in and we will argue for a lower assessment to your property tax value because your tax liability is derived directly from your assessment level. Trim notices are Florida's value notices. It's how the assessor lets you know what your value is going to be and what you're going to be taxed based on for this next year. It's a critical document as it pertains, or it contains critical appeal information for us and for your clients. It'll let you know about the certain legal description, acreage, all your specific property details, and the different jurisdictions that you're assessed in. And then CPAs and other property owners can play a key role in advising your clients on how to initiate this assessment and appeal process and the different opportunities we have to ease that liability for your property tax. So what are the property types affected here? Different property types that we see that are going to receive trim notices or have an increased value. Commercial properties, this can be retail, office, any multifamily units, all those are going to be commercial properties. Residential real estate, so your home, any condos, any duplex units. Large real estate portfolio holdings are a great target for assessment appeals. Developers and builders, as you complete new sites, as you start new projects, your property is going to start getting taxed as soon as that's complete. So we can come in and immediately affect change on the front end there. And then we see different compliance exemption opportunities for senior living and low income housing in Florida. So it's great to explore any opportunities we can for an assessment reduction or a property tax liability exemption. So what's the timeline here in Florida? Your property is valued as of January 1st. So when we're looking at what's the value going to be for the next year, we're taking a snapshot in time as of how the property stood on January 1st. So this brings us to current here. We're about mid to late August. So we'll see our trim notices, our value notices mailed to our property owners at the address listed by the jurisdiction. You'll get that in the mail and it will give you all, we'll dive into the breakdown of the trim notice here in a minute, but it's going to give you a great indication on your opportunity for a property tax appeal. Around September is when we see the appeal deadline happen. So this is about 25 days after you've received your notice. Within these 25 days, we call this the appeal window, and we have to get the appeal filed and everything in good standing with the assessor within that 25-day window. So it's extremely important to act fast. And then you'll see how quickly the process turns around here. By the time we hit November 1st, we'll already see tax bills issued and your values certified. So it's extremely important to act fast and to know when your deadlines are based on the trim notice mailing.
One thing I'll say about those deadlines too is we have a lot of clients and friends who don't live in the property full time. So if your bills are being mailed to your Florida property and you haven't received it because you're up north or in Europe, you can always log on to the tax collector's website to obtain your trim notice. You don't have to wait for it to come in the mail. If you haven't received it, you can also call, but the easiest one, calling a government office, it might be easier to just pop onto the website. You can search by your name or property address.
Exactly. And thanks for touching on that. I know I saw that question pop up in the chat. This will be on any of the county assessors' websites. So if you're looking to find that notice, if you're not in Florida or you're worried about missing the deadline there, we can go on to the assessor's websites, and each Florida assessor will have a certain tab that says find your trim notice. Like you said, you can search by your property address or parcel ID, and it will be listed on that account. So what is a trim notice? TRIM stands for Truth in Millage. This was mandated by Florida law in 1980, and it has been going strong all the way up until 2025, brings us to current. It provides you an estimated tax liability, a proposed millage, which is your tax rate, and any assessed value given to the property. And this is the only notice that you're going to receive of your increase to property's value before that appeal deadline. Your trim notice is not a bill per se, but it does give you all the information you need to proceed with the administrative appeal process in Florida. Your bill is going to be called the tax statement, and that will come after the values are certified in November. So this is what a stock trim notice looks like. In your county, you might notice some different coloration or maybe a little bit different format, but most every trim notice in Florida follows this specific format. So it will list your owner name, the owner address, give you all the information that's listed within the assessor's database here. It's going to provide a current versus your previous year assessed value. So you'll immediately be able to tell if your assessment increased year over year. It's going to give you a taxing authority breakdown. So you know specifically which taxing entity is providing which rate and how much you owe to each different taxing authority. So this can be the county, this can be your public schools, a municipality, water management, waste management. Different taxing entities have different tax rates, and they're all listed on your trim notice. So in effect, you'll be able to see exactly the dollar by dollar breakdown of where your property tax dollars are going to. So this will also include the proposed millage rates. So the assessors and the county government will propose a tax rate. That is going to be up for a vote. And if the property tax rate is passed, then it'll give you a breakdown of your tax liability in that scenario. And it'll also give you the picture of your tax liability if the tax rate vote fails. So you see two pictures, and it gives you a clear picture on the truth in your property tax rate and liability. So moving forward, this is the page 2 of the trim notice. You'll see the market value breakdown on this page. This is going to be a very clear picture of your this year versus last year market value. And if that number increased, that's your first indication that you could be a good candidate for a property tax appeal. Your market value is also known as the just value, and as provided by Florida, the Florida Constitution and described in state law, that just value is going to be representative of what that property would sell for on an open market, or what the income on the property indicates that the value is. It's going to be the amount a purchaser is willing but not obliged to buy and would pay, but or willing but not obliged to sell. So we don't want any pressure or any undue influence on the market value here. And then after this, we also list the assessed value. So this is going to be the market value minus any assessment reductions, and we'll get into that in 1 second. So your this could be different for different tax levies, and your assessed value could be different by entity. So each level of assessment for your individual property will be listed by taxing entity on this page. If you have any exemptions, they're going to be listed in the second column and at the bottom of page 2 of your trim notice. This is going to be any specific dollar or percentage amounts that reduce your assessed value. It's usually based on the characteristics of your property or the property owner. So some examples of exemptions applied are your homestead exemption. You might have heard of this. a veteran's disability exemption, a Florida non-homestead exemption, or any charitable exemptions. Each one of these that are currently applied to your account will be listed on this page. And then any assessment reductions beyond the exemptions will be listed here as well at the bottom. So you can receive an assessment reduction for various reasons, including there are limits to how many or how much the assessment on your property can increase each year. In Florida, there is a non-homestead cap of 10% increase to your property's assessed value year over year. The Save Our Homes program and the limitation for non-homestead properties reductions here are examples of assessment reductions. So if you have a certain type of property, like an agriculture or a conservation land property, then you could be eligible to receive assessment reductions, and that's something that we provide when looking at a comprehensive view of your property. And then some reductions lower the assessed value only in certain tax entities, just like the assessed value. It could be different based on the taxing authority, so based on whether it's the county, the public school, or the municipality. So that's the main gist of the trim notice. It's pretty clear. It's pretty self-explanatory. Once you know the components, and we've touched on the exemptions, the assessment reductions, your assessed value, and market value. This is going to give you a strong indication of whether your property values have increased, whether your tax liabilities have increased, and it will give you a good chance to get in at the ground level for an assessment appeal. So why do these trim notices matter, and why are they so important? It's the first and often your only chance to review and challenge the assessment. The appeal must be filed within 25 days of receiving your trim notice. This is extremely important. Deadlines are very firm because the property is valued every year, right? We can't have a lingering value for 2 or 3 years because that's not going to benefit the county and their property tax revenue collection or the property owners in clarity of their value. And if you're overassessed, then you're going to be overpaying in your property tax values or your property tax liability. If we miss the appeal, then that value is locked in for the entire year. So if you are overassessed and we miss the appeal, then we are going to miss out on the opportunity for a reduction to your property tax value for that certain tax year.
And that's a really big deal, particularly for homesteaded properties with the Save Our Homes cap. So if you do, this year we are expecting values to come down. Our property taxes in Florida are in arrears. So when you receive your trim notice right now, they're valuing for January 1st of 25, that's not going to be paid until November of 25 or up to March of 26. So people oftentimes don't realize that this is not next year's bill. You're actually paying for behind you. So the activity is lagging. The data with respect to the values is lagging. So the last year when bills came out, people were very mad because they're like, looking at the value today, if I were to sell my house in August of 24, did not match, the number that was on the trim notice. We expect the opposite this year, that it's going to be down. And to your point, if you miss the bus and it didn't go down enough, when your value can only go up 3% per year on your homestead, it's going up a bigger 3% that we may not be able to fix next year. So the timing, you cannot stress the importance of that enough. We do have one question though for you, Matt, and that's with respect to the dispute. We can only dispute the value, correct? Not the tax levy or any of what's being applied. We're just talking about the value, correct?
Yeah, definitely. That's a great question. So when I go in to argue a hearing here, I can't go in and say, I think that I should be paying $11,000 instead of $15,000 in taxes. That's not how we do it. It's based on the assessed value of the property. So if we lower the property tax or the property's assessed value, the rate's going to be applied to the lower value and lower your tax liability. So we're only focused on changing the assessed value of the property.
And that assessed value, I don't know if I don't want to steal your thunder if you're getting there, but I know one thing a lot of folks are looking at this year that's an anomaly is the amount of hurricane damage we had last year. So the value of the neighborhood is probably still there, but if my house had flooding and the next door neighbor didn't, how are they? Is that where you see these disputes necessary because they're painting the values with a broader brush?
Yeah, definitely. I think that is a great candidate for an assessment appeal because properties within a county are valued on mass appraisal. So they take characteristics of the different properties and similar, I guess, economic factors to apply across the board and create a mass appraisal. So we're not looking, we don't have the time to go in and look at every single specific property, go in and do a site inspection for every single piece of commercial property, real property, residential property in Florida. So if you aren't actively reporting the damage or reporting other things to your home, then you are definitely going to be overassessed, and it's not on the assessor to make that change. It's on you to report the damage and appeal that value as you're not reaching that full value.
That's great because I think a lot of people don't know that. Maybe they're working with insurance company, maybe they're working with the permit building department, but they're not communicating that to the tax appraiser. So
Exactly.
just because you may have permits outstanding for the damage, that's not going to get communicated. So we have to be on that. Can you speak to the limits of how much it can raise each year?
Yeah, so if it's not your house, Florida has a non-homestead cap to increases in your property value. That's called a non-homestead exemption, and you have to apply for it to be in good standing. And that will limit the increase to your property's value by 10% every year. So your assessed value of your property cannot raise by more than 10% every year if you have the non-homestead cap exemption.
Great. And for homestead, it's 3%.
Correct.
So that's important for those that are homesteaded because, like I said, once that goes up, we're not likely to see it come back down. So this is a unique year where there's an opportunity to sort of seize the day and get your ongoing tax bill lower because that's, even if it goes up, that's not going to be able to go, if it doubles next year, it still can only go up 3% for those that are homesteaded. And those caps are set by the state, correct?
Yes, they're set by the state, and then you will file with the county.
Perfect. That's perfect.
Good deal. Glad we were able to get that one answered. And this kind of what we can go through what happens after we file the appeals here. So 25 days before your hearing, you are notified of your hearing date. So you have a fair amount of time to go ahead and get all your evidence ready and get prepared for your hearing. 15 days before the hearing, it's on you to submit evidence. So any appraisal, any other evidence, document, valuation, pro formas that we have, we'll submit that to the assessor, and then 7 days before the hearing, we have to receive their evidence. So we have plenty of time to review and do evaluation, preparation, and hearing strategy before the actual hearing here. And then the hearing is going to be conducted and heard by a special master, and he will review and issue the decision. But before the hearing, we have the option to informally negotiate on your property. So this is going to be working with the local assessors before the formal hearing. We'll go ahead and pass our data along and see if there are any clerical errors or anything that's just jumping off the page different in our evidence versus the assessor's evidence. And if there are any glaring holes, most of the time we can go ahead and get a reduction to your property's value informally without having to go and actually argue at the hearing. So if we have strong data that supports a lower valuation, such as sales comparables, different appraisals, or market studies that are working in our benefit, we can usually see strong results at the informal level. And there's a potential for receiving a significant reduction to your property's value without having to attend the formal hearing. And in this instance, you'll see VAB, that is Value Adjustment Board. That is the formal authority that settles taxpayer disputes with the assessors in Florida. So that's the Value Adjustment Board. And if we're not able to come to an agreement at the informal level, that's where we'll go. We'll argue in front of the Value Adjustment Board. It's the formal forum for challenging property assessments in Florida. They hear the cases through a special magistrate ruling on the case. Usually that's a property appraiser or an attorney. They will review the evidence from us and the assessor to issue a final written decision. And if it goes in our favor, then we will receive a reduction at this point to your assessed value. So reductions to your property's assessed value have immediate impacts on your cash flow, whether that's business or personal. Florida has very high property tax rates. So even small reductions to your assessed value can lead to major savings in property tax payments. And these appeals are the vehicle on how we achieve that. We'll file these appeals, and the difference between the original notice value on your trim notice and the resolved final value that we're able to achieve either informally or at the Value Adjustment Board are going to be the direct impact on your cash position, whether that's through your business or personally.
Can we talk real quick, Matt, about how the property appraiser arrives at the assessed value, or before they make the exemption reductions?
Absolutely. So let's just go back here. One of the strong indicators of a property's value is if it is sold in an arm's length transaction in the open market recently. So we'll see how other properties that are similar in location, age, size, and use are performing on the open market, adjust the comparables to the subject property, and that'll give you a good indication of what your property would likely sell for in the open market. So the assessors will look at recent sales around the area in similar use and size to try to arrive at a value there. We can also use an income or cost valuation. Income valuation is going to look at all of the ability or the property's ability to generate revenue. It's going to take into account all the rent collected on the property, take out expenses, vacancy and collection, apply a capitalization rate, and it'll give you a income indicated value. And then cost takes a look at how much would it cost to build this property, to replace this property exactly how it is brand new today. And then we'll apply depreciation to the replacement cost new to arrive at a cost value. So there are three ways to arrive at these values, three main ways that we see the assessors arrive at these values. And that's sales comparison, income valuation, and cost analysis.
So how do you handle appeals for purchases? Like, we've got a question: how do appeals relate to the purchase of residential non-homestead properties in the year of the purchase?
So if I'm in a neighborhood and my house is sitting in the middle of the street, and my neighbor's house sold for $400,000, and it is all of my neighbors have similar build houses. That $400,000 that your neighbor's house sold for is going to be a good indication of a comparable property because it's similar in use, it's a house, it's similar in size, similar in age, and very similar in location. So those characteristics will be applied to the subject property. And what we'll do is we'll look at the comparable property versus the subject property. and make adjustments to the comparable property to align with the subject property. So this will give you an indication of the sale price adjusted for different property characteristics. And then
Okay.
arguing at a hearing against a sales comparison, sometimes we will look at an assessor's evidence packet and see, okay, I have my house here. They're using a sales comparison approach with my neighbor 3 doors down, and then a large house 4 miles away. And what we do is we'll go in and say, this large house that's 4 miles away is not a good sales comparable because it's not near our property. It's not the same size. It's a different use, different characteristics of the property. So we'll have them throw out those higher, I guess, extraneous comparables, and that will result in a lower valuation as well.
That's great. One more thing before we move on to the next slide. Is there a time frame or deadline to apply for the non-homestead cap exemption for the 10%, like there is for the 3% homestead?
Yes, I'll have to get a little more clarification on this, but I believe that it must be filed by November 1st. So before the tax payment.
Perfect. That's more flexible than the homestead,
Correct.
which is due March 1st. I gotcha.
Yes, yes.
So for your support when you are providing your detail and your data comps, et cetera, to the magistrate, do you have to use a formal appraisal? Is a broker price opinion from a realtor adequate? What type of evidence do you need to provide?
Yeah, so that's a good question. Anytime we have a certified appraisal that's lower than the assessed value, we'll automatically use that automatically. That's going to be a great piece of evidence for us, but that's not the only thing that we can attack them with. We can take profit and loss statements and balance sheets and come up with a income valuation. We can look at broker prices. We can pull listings of comps that are similar but have not sold yet, but they're listed for sale. We can do a cost analysis, or we can do sometimes an equity analysis. There are many different ways we can attack it, and it's not just by a certified appraisal or I guess a closing statement of a sale. Those aren't the only options that we can use as evidence.
How frequently do you see the reductions awarded? How often does the homeowner win versus the county? Is this worth doing?
We are very successful, and I can't give a good indication of the percentage that are successful just because a lot of these are so different. But if we have evidence and we go in, most of the time we will see a reduction to the property's value.
Yeah, I would say same thing on our end with anything, even with IRS. Like if you have your documentation in place, it's not something that is there for show. Like, oh, we act like you have a forum, but you really, but nothing is going to change. So sometimes people are successful. It's really they didn't follow the protocol or provide the required documentation, less than it's the agency refusing to review the documentation provided.
Exactly. I'll just touch on one thing real quick. So just adding on to that, we see a lot of reductions in our values, partly because in our account review phase, we really pick apart our appeal opportunities, and we provide a very clear picture of the accounts that we think we'll be able to achieve reductions on. So leading into our appeal season, we know that we're going to take really good candidates here, and we're not going to waste your time on accounts that we don't think that there's not a reduction opportunity on. So we're really clear with that up front, and we sort that out in the account review phase. That's always free. So we're always happy to take a look at accounts and see if they're a good opportunity before they're brought on.
Perfect. We're getting a lot of questions about, back to hurricane damage, about special assessments. If there's
Yes.
damage either for the homeowner or from the association, homeowners association or condo association, and insurance doesn't cover it, and there's a special assessment that they have to pay, is that going to have any impact to this process?
So that's separate from the appeal process. I think that that's a completely different animal. Most of the time, you're dealing with a special assessment or a hurricane relief program in Florida specifically. That's separate from the administrative appeal process. I think that might be worth doing another session on in and of itself.
Yeah, I think really the hurricane damage is, as it relates to today, is really, if it hasn't been repaired, there's a diminishment of the value, and that's what needs to be done. But if you've paid for those repairs out of your pocket rather than insurance or fighting with insurance, if it's been repaired, then arguably the value's back up, right? So
Well, property is valued as it's set on January 1st. So if your construction was completed in 2025, past January 1st, then there might be an opportunity to go in and look at how it's set on January 1st and argue for that value,
Sure.
Even though the construction might have completed sometime in 2025.
That's a good point. That's a good point. And again, if you're homesteaded, you're going to get that reduction this year, and then they're only going to be able to go up to 3%. So that's another really good angle in terms of the timing. Thank you.
Yeah, definitely. So let's jump ahead and look at some trends that we've seen. So we've seen slower growth in some counties like Miami-Dade, for instance. So the real estate market was extremely hot from 2018 to 2023, and the values from the assessors, they got extremely cocky and jacked them up very high recently. So we've seen slower growth here in 24, 25, but the millage rates, the tax rates, and the property values have not reflected those changes. So your value, you might be still getting valued based on an over or a higher, better, more effective market than where we currently stand today. So there's pressure on local budgets and school funding and education because of the storm recovery. So don't be surprised if you do see those special assessments or I guess an increase to your assessed value to try and cover some of the needs that the property tax revenue base covers. And then there's legislative interest in reforms in Tallahassee. We've seen limited relief with those exemptions and other caps to the assessed value, but we will continue tracking that, and we will make everybody aware if we do see any legislative reforms here in the property tax world.
Any interest in diving into the ring about whether our property taxes are going to be eliminated, as the politicians like to punt around here, getting everyone excited?
Well, I can't touch on exactly what DeSantis might be thinking or what anybody might be thinking specifically with the property taxes in Florida. But what I would say is the biggest deal is if we take property taxes away, then what are we going to come in and replace it with? Are we going where something's got to come in and cover that gap? And whether it's a state income tax, a higher state income tax, or I guess other sales tax, something's going to have to come in and cover that base. So
it's the devil you know versus the devil you don't know.
Exactly. Yeah. So well, that's the only comment that I really have to contribute on that. But I'd say, as of right now, I don't think it's going to go away in any way. I think the property will be taxed in some form or capacity, whether that's passed on to businesses rather than individuals. That may be something that happens, but we will continue tracking that as the legislative updates come in.
Does depreciation enter into the equation for non-homestead investment property?
Absolutely. So that's going to be our cost valuation. So that's your replacement cost new less depreciation. So what would it take for me to rebuild this exact property, this exact structure today? And then how old is it? What asset class is it in? And based on those two factors, we'll apply a certain amount of depreciation to the replacement cost to come up with a current valuation.
Thank you. All right, I'll let you move on. I'll stop interrupting you.
Oh, no worries. These are great questions. Thank you, everybody. Key audience for property tax planning: real estate investors, developers and builders, property homeowners, residential homeowners, seniors and low-income households, like we touched on with the assessment reductions, and commercial and industrial property owners. These are all great audiences. Just to go ahead and look at your portfolio if you haven't yet, and an action plan for 25 here. Late August, so we're about mid-August, moving forward to the end of the month here. Look out for your trim notice. Go online if you haven't, or if you're nervous about a date of mailing. Review that trim notice based on the factors that we've shown today, and look out for those certain increases to your value or proposed increases to your property tax rate. In mid-September, we're going to need to file our appeals before that deadline. Remember, our deadlines are extremely important in the property tax world. They must be met, or we lose the opportunity to achieve an assessment reduction for this tax year. And then November 1st, if you pay early in your property tax payment after you receive your statement, you can get a 4% discount to your tax payment. So paying that early, getting a quick turnaround after that November 1st statement is mailed to you and issued, that could be key in further savings to your property tax payment by paying that early.
Can you pay early even if you have an appeal pending? Let's say your hearing's not till February.
Yes, you can. And then refunds are sorted out in that instance afterward. But usually we see that deadline for tax payment will be extended if we're in the administrative appeal process currently. So November 1st is the good indicator. There are some instances where that doesn't apply, but good rule of thumb, err on the side of let's go ahead and check November 1st to make sure we have a certified value. If we have an early payment, then let's go ahead and pay it if we're in a position to go ahead and do so.
Okay, great.
So what do we do here at Maguire Sponsel? So we will review the trim notices with exactly the eye that we just mentioned here. We prepare appeals, your evidence, and represent informal and formal hearings, and we will represent the taxpayers and property owners in those value adjustment board hearings. We'll come up with the market analysis and comparable properties to argue for a lower valuation. And we will provide any compliance guidance. So any deadlines, any property tax rate elections coming up, any payment due dates, any opportunities for reductions or assessment exemptions. We will go over that, look over your opportunities for those, and let you know if you apply for any of those exemptions or reductions. And key takeaways today: your trim notices are your early opportunity. It's always good to be early in the property tax world. So the faster you get your eyes on that and make a decision about the appeal process, the better. Know your appeal deadlines. If we miss the opportunity, if we miss the deadline, we miss the opportunity for the entire tax year. So we have to act fast as that window closes quickly, and there are high ramifications for missing that deadline. And be proactive, not reactive. So we want to make sure that we have our trim notice, we have eyes on it, we know our property taxes value, we know exactly our deadline, so we don't have to deal with any missed deadlines or missed opportunities here. Being proactive and is always going to be better on the front end of the property tax world than being reactive.
Yeah.
And we'll take it to Q&A. I really appreciate everybody here, and thank you for the great questions. If we haven't touched on it, please feel free to throw it in the chat, and we can get anything answered now.
We do have a few, actually. If several people have asked, can you give us a little overview about how your pricing works for a dispute like this?
Yeah, so we work mainly on a success-based structure. So we will charge a percentage of the tax liability savings that we achieve. So if we don't achieve a reduction on the account, we don't get paid. We have a success-based fee on that, and that is the majority of how our pricing structures work. Some of the times we'll look at a flat fee, but in this instance, most everybody on this call would be would qualify under that success-based commission structure.
Perfect. Couple other technical questions. Can you talk a little bit about on the tax collector's website? There's a few values. There's building, extra feature, assessed value, taxable value. Is the taxable value going to be the one that matches sort of the fair market or value you'd expect a realtor or an appraiser to come with? Can you talk a little bit about that?
Yeah, so the fair market value or the just value is going to be the highest number out of all of them. That's going to be the market value of the land and the buildings on the property and any outbuilding structures. So any sheds, any other improvements to the property that are on the property, but not an actual building itself. So that'll be the sum total of what the land, the building, and any outbuildings on the property would sell for. We will that's the just value. Your taxable value is going to be the same as an assessed value. So just market value are the same things. Taxable, assessed value are the same thing as well. That's going to be the value that you're taxed on based on, I guess, the cap from year over year, if any assessment reductions or any exemptions apply to the account. Okay. So market value minus assessment reductions or exemptions equals taxable value. Taxable value times your tax rate equals tax liability.
Perfect. Perfect. Can you talk a little bit about the documentation? I don't know if this might be outside what your today's scope, but we have a question to say, what is the documentation the tax authority uses to validate homestead? We may need to touch on that in a separate homestead webinar, which is coming.
So the primary function of a homestead exemption is to say, this is the land that my primary homestead. This is my primary home. This is where I'm making my home in Florida or anywhere else in the country, really. That's the primary function of a homestead. So in Texas, I can speak directly to Texas's. We have ID verification and then a recent water bill and then an application. So if you have a government ID, your driver's license with the current address on it, most of the time that'll show that'll be enough. That'll be enough. All you need to show that you qualify for the homestead exemption there.
The additional hurdle we have here when you make the application is it's driving license, utility bill, voter's registration card, copy of the deed. And if the big thing that's different here, I think, than a lot of other places is if you have property in other states, you'll be required to submit a letter from the county tax authority in that county suggesting that you don't have homestead on another property. So that's a
Correct.
big one that folks don't necessarily run down, and then they get a denial because they moved out of their house up north into this house in Florida, but didn't tell the county. And the homestead benefits are small, so they're not on top of mind for folks like they are down here. Everybody is yakking about homestead here all year, but that's not such a big issue in terms of how it's handled up north. Can you touch a bit on portability and how the portability of the homestead savings follows with this process?
Are you referring to if you move from house to house, does that
to save our homes? Yeah. I don't know if that's beyond the scope of today for you.
I mean, so if it's the example that I just laid out, then all it is going to be a transfer of your homestead exemption. So we already touched on, you can only have one homestead exemption. Usually that's going to require living more than half of the year at that certain location. So if you can show that you've gotten a new driver's license, a new deed, you closed on the house, most of the time you can provide a closing statement. Then basically you file on the homestead application, it lists your old homestead exemption, and then you get it applied to your new property by filing a new application after you move.
Yeah, perfect. One quick question: if my realtor value is higher than the taxable value on the tax collector website and my property is a rental, not homestead, I would not have a case to appeal. Is that correct?
I'd say we could take a look at the income generated. So we take the entire rent collected on an annual basis and then apply different market factors, and we might have an opportunity there. Just because it's listed at a certain price doesn't mean that that is the guaranteed price. Sometimes we're looking at a future revenue stream that could be inflating the certain value there. But I would say, yeah, that's mainly that.
Okay. Another question was, a realtor was told by the city of Sarasota they automatically port the property tax to the new property if in Sarasota. Let me say that's true if you do the homestead application online. If you go in person to the county property appraiser office and fill out the homestead application, there is a separate portability form that you have to complete as well. It is not automatic unless you're doing it online. If it's online, then it will be. And then I've got another question that we need to address in terms of timing. If you buy property mid-year after January 1st, you inherit the seller's value as of August 1st. If they were homesteaded, you're homesteaded. And then you got to do your own new homestead application. You're going to get your own new value at post-transfer when you get your trim notice this time next year.
Correct.
And then we've got contact details for you, gentlemen. I believe I've exhausted the questions. The questions were great today, and you guys were even better. So I appreciate you. If anybody would like a copy of the slides, are you able to supply them?
Joanne, I
yes,
will send over a PDF version to you that you can distribute to anyone that was on the call today. So,
perfect.
And if there's
We'll
people that couldn't make it, we could do that as well.
The recording will be available as well. We need a minute to process that, and it'll be posted on both the Koontz & Associates website, our Facebook page, and our YouTube channel. So if anybody needs to access that, if you can't find it, you can certainly email as well, and we'll get you squared away and get it delivered to you. I appreciate everyone's time and attention today, especially you gentlemen for being so helpful and so informative. This is a big splash every year. I try to cover this time every year. Just to remind people because it's so important. So thank you so much for your time and your help, and we'll see everybody next time.
Thanks for having us.
Thank you.